But remember, Lupin has reported a good set of Q1 numbers. The revenue surged more than 32% and US sales jumped 43% to $366 million. Our colleague Ekta Batra caught up with the company's top management and began by asking about the quarter gone by and the growth outlook for the US business. Let's listen in.
Yeah, so it was a very strong contribution this quarter, with both products, with, tolvaptan as well as mirabegron, but already started to see pressures on mirabegron. We had an additional launch within the quarter, Amneal with the MSN product, launched their generic, and so that has an impact on pricing in particular, although we've been able to maintain our share with both the growing, generic penetration of the product as well as incremental, channels, customers that we've acquired.
Okay. Are you sticking, Vinita, to that $1 billion guidance for the US in FY27?
With the upside that we've seen in Q1, we should be ahead of that, between 1.1 to 1.2 billion, hopefully.
Okay, so you are increasing your US guidance. So what would that mean on a quarterly basis? What can one assume would be a base run rate for the company going forward? You did around $366 million this quarter. You did around $370 million in the previous quarter. Tell us what we can expect.
Also, quarter on quarter, there might be impact of erosion on a few products as well as, addition of new products. But as we have mentioned in the past, we will hopefully be at the 250 million plus every quarter.
Okay. Price erosion, is that a concern in the US in terms of the base portfolio?
Not on the base portfolio other than mirabegron and tolvaptan. I mean, the base portfolio has been fairly stable. Both the respiratory products have been fairly stable and a strong contributor to the baseline, as well as other legacy products. But with the additional competition that we see in tolvaptan from Q2 onwards, plus the mirabegron competition that we've already seen, obviously there's an erosion from those two products.
Okay. Well, Ramesh, the margins were definitely better than the guided 25% for FY27. Are you hiking the margin guidance based on Q1?
No, whilst we have done extremely well in the first quarter, we're also conscious of the fact that there could be reduction in mirabegron on tolvaptan because of the intensity of competition being higher. And we are also conscious of the geopolitical tensions and concomitant price increases. So as you would know, freight costs have increased, both air and ocean freighting. There have been increases in terms of raw material prices and the like. So clearly, the first quarter doesn't capture it all because you're carrying some inventory from the past, but there could be some impact in the quarters to come. So we would rather be a little prudent about it and err on the side of caution. So I would stay the guidance of between 24-25%.
Okay, so you're sticking with 24-25% in terms of guidance for FY27. But just give us a sense in terms of, what exactly the street can expect on a quarterly basis when it comes to margins.
Whilst, if you talk about the medium term, I would say that there is going to be secular growth in margins and the like. There will be some volatility amongst quarters. As Vinita also pointed out, there could be volatility in terms of a turnover. A top-line variancy would be maintained in the long term, but there could be, again, some volatility amongst quarters. So that would potentially flow through to the bottom as well, and I'm conscious of that.
All right, Dinesh, the India business was strong with around a 14% growth. Your diabetes franchise led this time round. What was the contribution of GLP-1s or weight loss drugs in terms of the diabetes franchise growth? And what can we expect in terms of the India growth as a whole?
Sure. We actually grew 14.8%. Diabetes, like you said, grew stronger, 31.8%, 60% ahead of the market. Even without GLP, that growth was 27%. So there's a solid growth in the inline diabetes portfolio, also driven by the insulin portfolio. Now we're the second largest insulin company in India. Very proud of getting to that position. Obviously, we'll grow that further as well. So I think diabetes is going strong for us, for the market as well. We obviously will continue that through the year. Cardiac going pretty strong as well. Respiratory has been a little slow to start, but hopefully from Q2 it will pick up as well.
All right. And India as a whole, are we expecting this 14-15% growth to continue? And what would your exit rate be for FY27?
Yes, we would expect it to continue. I think 30% ahead of the market. The market's growing very strong as well. I think even IQVIA raised its estimate for the market to double-digit growth. We're growing 30% ahead of the market. We would intend to continue doing that.
All right. Before we wrap up this conversation, Vinita, President Trump's tweet with regards to generic drugs, how exactly are you approaching it as a company? How should the industry think about this?
Yeah, so, we've been through this path before with the 232 investigations and just methodically went through what the implications are and educating all of the stakeholders in the administration to what the implications would be on tariffs, whether it's 100% plus 200% could really lead to significant inflation on the generic front, given 70% of the drugs, on the generic side of the business are imported into the US, 50% out of India. We believe that no one wants to see exacerbation on the drug shortage front, and the conversations that we are having with the administration, we believe that they seem to appreciate it. And while they still have a desire to bring more onshoring of essential medicines, no one would like to see drug shortages. So as an industry, we're adopting a very similar approach as we took to 232 investigations, maybe a step ahead in terms of highlighting the implications of both inflation as well as bringing manufacturing of high volume essential medicines into the US, what it would mean in terms of cost of manufacturing and investment in the US, and what it would take in terms of incentives and offsets from the administration to get the industry to consider any incremental manufacturing in the US.
Well, that was the management of Lupin. Seeing a bit of profit booking, while the US guidance seems quite positive, the EBITDA margin guidance has not been increased, contrary to what the market was expecting. Well, we'll now slip into a short break. Up next, we will connect with the management of Interaj.